My guest today is about to turn heads in the gold sector, and for the right reasons. Joining me is Walter Coles, CEO at Skeena Resources, a gold exploration company developing 3 significant projects in BC's Golden Triangle. Skeena trades as Ske on the TSX Venture Exchange with a market cap of roughly 65 million Canadian dollars. Skeena has just published results from a preliminary economic assessment on the Eskay Creek property, and it is one of the most eye-popping economic studies I have seen since closely following Canada's gold sector. Eskay Creek is potentially a large, long-lived gold mine with a post-tax payback in under 1 year at current metal prices. Walter, welcome, congrats, and can you please give us an overview of the PEA results?
Sure, Tommy. Thanks so much for having me. Just the high level on the PEA is it's an open pit project. It should produce around 300,000 ounces of gold per year using a gold price of $13.25 and a silver price of $16. It has an after-tax NPV of 638 million Canadian dollars. The IRR after tax is 51%, and the initial payback on capital is just over 1 year. So, in my view, phenomenal numbers, and certainly very pleased with our team, both in-house and out, and the consultants who've worked with us in putting this project together.
I know you're really excited about this PEA, but I'm wondering if the results surprised you, how good they were.
I had some clue, even a few months ago, that this is what we might achieve, but this is such a difficult sector, and I'd say I've had my hopes crushed so many times before in a junior exploration company that I just kept hoping, what's going to be the fatal flaw that we're not accounting for. So big sigh of relief to get it to this point, with the caveat that this is a PEA. It's still preliminary, and we have a lot of work to do as we move this to a feasibility study.
So I think the big question that we talked about in the spring was metallurgy, and question of whether you guys could recover the gold economically. This PEA obviously suggests that you can. How did you get metallurgy sorted out?
Yeah, so I guess I'd start with acknowledging that this is effectively a refractory gold deposit. Having said that, we did try to see if we could use cyanide to leach the gold and create doré. And unfortunately, the recoveries are not very good, and that's probably the same thing that the historical operators went through that same process, and where they ended up was direct shipping the ore or producing a concentrate. And given the test work that I just mentioned on cyanide, we realized we were going to have to do something different. So we did investigate using pressure oxidation, which would give us the ability to create doré at site. The downside of pressure oxidation is the capex and the technical aspects of it. It's a more challenging type of plant to build. The advantage of the concentrate is that we substantially reduce the capex on the project. And when you see what our capex is, it's 300 million Canadian, or approximately 230 million US. For a project that will produce 300,000 ounces a year, that's a phenomenal capital intensity ratio. So it makes the project economics really attractive, as I mentioned, the return on, the IRR and also the payback on capital. In effect, what we're doing is we're pushing that capital off to smelters. We create a concentrate and then we ship it abroad, and we certainly get the pound of flesh taken from us by the smelters in the payabilities. So that's why when you look at our all-in sustainable costs, that's more, I would say almost more industry average. We're in the second quartile, but that was the give and take, the balance.
That's what reduced the capex initially. So the PEA mentions a term sheet from a Chinese offtake partner, and I'm wondering, how reliable are they?
Yeah, it's not. It's actually from a concentrate trading group in Switzerland, who advised us that the best terms on this concentrate would be received out of Asia. But we did speak with other smelters in Quebec, in Namibia, and through other people into China. So we had a number of different quotes that came in. But the one life of mine term sheet that we went with as the basis for the PEA came out of Switzerland.
That the PEA is conventional from a mining sense?
Yeah, I think so. I think it's a pretty straightforward PEA with the caveat that we're in an area that will receive lots of snow in the winter. I mean, it's renowned for the amount of snow you get up at Eskay Creek. And the other thing I would say is that the blending aspects of this particular project are another unique aspect to it.
Who are the engineers that helped you with the study, and are they involved with other projects like it?
Yeah, we had three different groups. We have Osenko on the overall lead. We have SRK helping us both on the resource side and the metallurgy. And then we had AGP on the mine design. Most recently, I know AGP was working on Victoria Gold. And most recently, I know Osenko built the mine for Atlantic Gold. It was a turnkey project build out that Osenko did. And SRK is certainly a world-renowned engineering consulting firm.
Why would you say that Eskay is unique? And are there any projects like it in a junior company today?
Yeah. A long time ago, I think it was 2005, I met with a fellow, an engineer by the name of Ron Hochstein, who's currently the CEO of Lundin Gold. And back in 2005, he made a comment to me that I've never forgotten. He said, "Good grades make for good miners." And it's a little play on, obviously in school, if you make straight A's, you're going to be a good engineer. But what he was really getting at was if you have good grade, then you're likely to have a good grade, meaning good concentration of gold or silver, you're likely to end up with a robust mining project. And that's what we have at Eskay Creek. For an open pit project that has over 4 grams of gold equivalent, and the deepest point of the pit is just over 200 meters. Like, it's the grade that gives this project its incredible economics and margin of safety.
What do you think about comparables? Like, who would you say has a project like this out there?
Well, in terms of junior companies, I don't really know of any other junior companies that have a open pit project with this kind of grade.
Certainly, Sabina does, but almost 10 times larger valuation.
Yeah, Sabina has an excellent project. Integra has a great project down in Idaho. I mean, those are the companies that I sort of aspire to, match in terms of their management and performance. But my feeling on this project is it's a unicorn. It's got size. It's got infrastructure that's all been built out by previous producers. We're in Taltan territory. There are partners there. I couldn't ask for a better local community to have this project in their ancestral territory. There's so many wonderful things about this project that I think, in my mind, all add up to the fact that this will be an operating mine again in short order.
Is it possible to grow the resource and maybe make Eskay Creek even more robust?
I think so. There's two areas of mineralization at Eskay Creek. There's the Eskay contact mudstone. That's the area that was targeted for underground mining back in the 1990s and 2000s. And then there's a horizon right underneath that called the rhyolite. And the rhyolite is clean ore. There's no mercury or arsenic or antimony in that, but it's lower grade. And I think the easier exploration upside is to go expand the number of ounces in the rhyolite, because it was largely ignored by the previous operators because they had a much higher cutoff. But I think that there's a great opportunity to grow the rhyolite, and then there's some other opportunities to grow the higher grade section as well. So the answer is, I do think we can grow this in a substantial way over the next 18 months, 2 years.
So next steps, obviously, feasibility study and permitting prior to mine construction, obviously. So what are you expecting, or what are you targeting that to take in terms of timeline? And also, could you comment on budget to do that?
Yeah, I want to be very careful, but I've learned this the hard way. of going out on a limb and saying, we're going to have such and such done by such and such date when I don't know for sure what those timetables are going to be. So I want to be cautious about this. We have Eskay doing a study for us right now, basically laying out the budget for the next 2 years and all the various steps that we need to, or various milestones that we need to achieve to advance this project as quickly as possible. I'll just say that we have the advantage of, this is a brownfield site. We have 20 years of climate and wildlife data. We have a history with the Tahltan of them understanding this project. And those are all things that should accelerate the timeline to getting this project back into production. But I can't give you a budget or a time frame specifically at this point in time. I can say that the next steps for us are to continue doing the infill drilling and move that inferred resource into the measured and indicated category, so that as we do either pre-feasibility or feasibility, all of those resources will convert into proven and probable reserves. So that's our sort of ongoing focus while we study and lay out our game plan for the next 2 years.
Could you comment on what Skeena's goals are corporately, and maybe what you consider to be your top responsibilities now that these results are out?
Yeah, I think my responsibilities are the same that they've been over the last 2 years, and that's to be a team leader, find the right technical people to join our team as we move from exploration towards development. I think in the last, when I first joined Skeena, 4 years ago, there's not a single person at Skeena today from 4 years ago. We've built an entirely new team, and I expect that we will do that as we move into development. So that's on the people side. On the asset side, we're switching from being an acquirer of assets to now everything is for sale with the exception of Eskay Creek. So any of your listeners want to put in a bid for any of our assets, we'd like all cash on those bids, but everything else is for sale, and we're going to be entirely focused on Eskay Creek.
And but like long term, like what would you say is your vision? Is it to build a mine or to sell to a mid-tier?
Yeah, I like the Australian model, and I think that the Canadian industry is often criticized for being overly promotional, and I think the Australian model is focusing on building real businesses, building cash flow. So that's the mindset I want everyone in our team to have, is how quickly and how solidly can we turn this idea, this concept, into a real business that generates real cash flow. Now, having said all that, if somebody, if some entity wants to come and make us an offer for Eskay Creek, if it's an offer that reflects the intrinsic value of this, in my mind, very much a unicorn kind of property, then of course we're always willing to have those discussions and try to achieve the best results for our shareholders, whenever those opportunities come along.
So we got to talk about Barrick.
Yep.
They have a back-end right to acquire 51% of the project, correct?
Yes, that's correct. And we haven't purchased the property yet. We have an option on the property to acquire it 100% by making a payment to Barrick of $10 million Canadian. There's a bit of a swing on the purchase price, though, because when we negotiated the deal, the estimate on the environmental bond was $7.7 million. If it turns out that environmental bond goes up, then the purchase price would decline by the corresponding amount. So we're really not going to know that till we sit down with the government and with Barrick and negotiate the environmental bond and execute the transfer of title on the property. But that's something that we intend to do over the next 12 months. So big milestone for the company will just be acquiring Eskay 100%. Once we do that, there was a hurdle on a Backend Right of 1.5 million ounces indicated or better. So we've crossed that line. So once we acquire Eskay 100%, Barrick will have 12 months to come back into the project for 51% by paying us 3 times our cumulative expense on the project. So my view on this is that we win either way. If Barrick decides not to back in, then we'll own 100% of the project. and have to proceed in advancing it ourselves. If Barrick does choose to back in, we'll have one of the best partners in the world as an operator on this project, and we'll get paid back 3 times what we spent up until the point that Barrick backs in.
So two of the most valuable Northern Canadian gold emerging gold stories are Pretium and Sabina, and they both attracted investment from China's gold sector. I'm wondering, do you see the Chinese playing an important role in financing Skeena? And have you been brushing up on your Chinese?
I have not been brushing up on my Chinese. Look, we would treat every potential partner exactly the same way, whether it's a Chinese, Canadian, US. We'll talk to any and everybody about potential opportunities, but we're not targeting any specific group as a partner on this project.
How do you anticipate getting the word out about the PEA? I mean, are you about to embark on an aggressive marketing schedule, or?
I am, in fact. I'm headed to Toronto, New York, London, Zurich, and Geneva over the next week and a half to meet with some of our larger shareholders and other shareholders who don't own any of Skeena to tell them about our progress and hopefully get them to join our shareholder register in due course.
And what would you say, just to encapsulate what the PEA means to your team as a final word?
Well, I think everybody's really proud of the outcome here with Eskay. This is an incredibly difficult business, and you got to work hard, and sometimes you have a little luck. And I think the combination of luck and hard work gave us the product the outcome that we have with Eskay. So I feel like we could take a brief moment and give ourselves a pat on the back, and then it's back at it because there's a lot more work to be done here.
Well, I expect that you have a lot of calls to return, and I just want to say thanks for taking the time to share the story with us, and I look forward to following up with you soon. Just a cautionary note to listeners, the PEA is preliminary in nature. There's no certainty the PEA results will be realized. Please read Skeena's CDR profile for additional risk disclosures. Walter, thank you very much, my friend. Good to see you.
Thank you, Tommy.
Some people on CEO.CA think that the current gold price is kept artificially low by certain market forces and believe gold is headed north of $5,000. And I'm wondering, have you run the economics on Eskay Creek at a $5,000 gold price?
Gosh, wouldn't that be nice?
I don't know what the world would look like.
Good point. I haven't run the numbers, but I can quickly do them right here. I'll put them into the spreadsheet. So $5,000 gold. And what silver price do you want?
Let's go 200.
Oh my gosh. Holy smokes. It's a $9 billion post-tax NPV. And the IRR after tax would be 274%. So yeah, let's hope the world doesn't come to that.
Anyways, thanks for indulging us.
Yeah, sure thing.
Great to see you.
Yeah.